Hey, Puppy Trades, wanted to do a video analysis update on stocks in the wholesale, retail, and consumer staples sector. These stocks are going to include Amazon, Walmart, Costco, and BJ. So the first thing we're going to do is we're going to look at the Amazon chart and see that this is a very large bull flag from the March low to the September high, and then it consolidates sideways with declining volume, confirming bullish consolidation. And we're going to see that Amazon, if you take the beginning of the first leg of the bull flag with the top of the bull flag and the low of the bull flag, we have a beautiful Andrews pitchfork where the median has acted as a magnet and a resistance, and the lower bound has acted as a touching point as well. Now we are outside the lower bound of the pitchfork. We're going to go back to the lower bound of the pitchfork. We're going to go back to the median of this pitchfork. If we take the length of this first leg of the bull flag in time and price, and we place it at the low, then if 2,950 holds, then we are expecting that Amazon will reach 4,800 in the next 5.5 months. So 5.5, 6 months is the time target because that is the length of the first leg of the bull flag in time and price placed at the low of the bull flag. We have a very nice Andrews pitchfork where the median has proven to act as a magnet and a resistance point, and the lower bound of this pitchfork is where Amazon is heading next. Okay, from an Elliott wave perspective, we're going to see that in the short term, we are going to take the length of this move and place it at this low. The reason we are going to do that, as I will explain, is because I believe Amazon has completed an ABC correction from the high from September 2nd. One of the big reasons I believe that is because Tesla, AMD, Apple, and QQQ, and SPY, and the Dow Jones, and the Russell 2000, and Google made that exact same 9.2 high, and they've all, well, Apple is getting very close to, have broken above the 9.2 high, okay? So they broke above the 9.2 high. Apple and Microsoft recently broke above this high of wave 1 and confirmed that that was all consolidation. And so what we are going to expect now is that Amazon is next in line in this rotation. So we take the length of this move and we place it at the wave 2 low because the wave 3 target is the length of wave 1 conservatively because wave 3 is actually 1.618 times the length of wave 1. So the reason that I use equal lines is because wave 3 is larger than the length of wave 1, and wave 5 is at least the length of wave 1. Okay, so equal legs is a conservative target for wave 3. That means in the next 3.5, 4 months, 3.5, 4 weeks, we are expecting that Amazon will reach 3,578 so long as 2,950 holds at the low. So we have an ABC correction, we have a wave 1, and we have a wave 2. Now we're going to go reach the equal legs target of 3,570 in the next 3 to 4 weeks. Okay, so in the short term, we're expecting Amazon will reach, close to 3,600, and in the next 5.5 months, we're expecting that Amazon will reach 4,800 so long as 2,950 holds as the low. That's going to factor into our analysis of SPY in the future because we are expecting, SPY has a large holding of Amazon. So SPY and Amazon will move together because it is a large holding of SPY. Okay, so in the short term, we're expecting that in the next 3 to 4 weeks, Amazon will reach 3,570. In the longer term, in the next 5.5 months, we're expecting Amazon will reach 4,800 because that is the bull flag target in time and price, so long as, for both of those projections, 2,950 holds as the low. Another stock we're going to look at is Walmart. I like this Walmart chart because you can analyze it from different perspectives. We go on a wave 1 higher, a wave 2 correction, a wave 3, and then a wave 4 sideways, and now I believe we are in wave 1 of wave 5. We completed wave 2 of wave 5, so now we're starting wave 3 of wave 5, then we'll have wave 4 of wave 5, then wave 5 of wave 5, okay? This is a really good example, of how, these waves are, characteristics look like in action. So wave 2 and wave 4 are the corrective waves in Elliott wave theory. So wave 2 and wave 4 correct in A, B, C corrections. Wave 2 is typically 61.8 to 50% of wave 1. Wave 4 is typically 38.2% of wave 3. So wave 4 is a more shallow retracement. Wave 2 is a deeper retracement. So I say that wave 2 scares you out. Wave 4 wears you out. Wave 4 has a lot of, sideways frustration because the stock isn't moving. Okay, wave 2 is a little deeper, it's a little scarier. And the reason it's scarier is because you're going to get a bigger reward. You're not just going to get a 1 impulse higher, you're going to get wave 3 higher and then wave 5 higher after your wave 4 correction. So our price target for this video is going to come from Walmart taking the length of this move in time and price and placing it at this low. The reason we're going to do that is because Walmart has also formed a textbook bull flag. So for a bull flag, you're going to take the length of this move in time and price, and you're going to place it at the low of the consolidation. So this is our textbook sideways consolidation, and we're reaching, we reached the apex of the bull flag, and then we broke out of the bull flag, and now we're back testing the bull flag, okay? So a classical trader who doesn't believe in wave theory is still going to say that this is a bull flag leg 1, consolidation sideways with declining volume, and then we're going to go break out and back test this bull flag. So we are going to reach 171 because that is the length of the first leg of the bull flag placed at the low, okay? So 171 in 2.5 months is the time and price target because that is the length of the first leg of the bull flag placed at the low, okay? So we have leg 1 of the bull flag, sideways consolidation with declining volume into a pennant, and then we've broken out and back tested the bull flag. So the theoretical stop loss is 141. The invalidation level is 137. Okay, if those levels hold, then I am expecting that Walmart will go reach 171 in the next 2.5 to 3 months. If we take the beginning of wave 3 and the high of wave 3 and the low of wave 4, which is also the beginning of the bull flag, the high of the first leg of the bull flag, and the low of the bull flag, we're going to see a very beautiful Andrews pitchfork with a reaction on the median. And now, from a pitchfork perspective, the buy is to the lower bound, is from the lower bound of the pitchfork. So you're buying the lower bound of the pitchfork. No one's buying the lower bound of the pitchfork. This isn't an investment advice, but the pitchfork you buy outside the lower bound and then you sell at the median. Okay, so we're expecting that we're going to go from outside the lower bound back to the lower bound and then eventually back to the median. From a pitchfork perspective, from a bull flag perspective, we're taking the length of this move in time and price and placing it this low and saying we've broken out and back tested the bull flag. From a wave theory perspective, we went on wave 1, ABC, wave 2, wave 3, wave 4 sideways with declining volume, and now we're in wave 1, 2, 3 of wave 5. Okay, let's look at Costco real quick. Costco, I really love this pitchfork right here, but a lot of you guys say that you really want the wave count. So here's the wave count. We had our nest 1, 2, 1, 2, and then what you're going to do for a pitchfork, you're going to take the high of wave 1 and the low of wave 2, and you're going to have a valid pitchfork, which is going to be your wave 3 target. Okay, so we have our wave 1, 2, 1, 2 nest. That is, a nest is multiple 1, 2s in Elliott wave theory. So that is just a more powerful version of a regular 1, 2. It's multiple 1, 2s. It's a nest. So that is, building up this explosive move. And as we can see, Costco certainly did have our, explosive move. So we connect the high of wave 1 with the low of wave 2, and then the median of that pitchfork is going to be your target for wave 3. So we did reach the median of this pitchfork. That's our wave 3. Wave 4, we bought the lower bound. Wave 5, was at the median of the pitchfork. From an Elliott wave perspective, we had a ABC expanded flat. Okay, so this is an expanded flat. A lot of traders will say, everything that's a new high is an expanded flat. You don't just assume everything's an expanded flat, but if it makes a marginal new high, then this could be, instead of a regular flat, which is typically makes a lower low, an expanded flat goes A, and then wave B makes a very slight new high. Keyword very slight. A lot of people forget that, and they'll say like anything way up here is an expanded flat. Makes a very slight marginal new high, and then a wave C, as usual. So we have a very large wave 1, because this is a 1, 2, 3, 4, 5 wave 1, an ABC expanded flat. We're going to put in our wave 2. So the invalidation level for this projection, or actually, the theoretical stop loss for this level is 360. The invalidation level, unfortunately, is pretty far down here. So, we're just going to say we want 360 to hold as the low on a daily close. Okay, if Costco closes below 360, we will revisit this chart. But what we're expecting is that this is a 1, 2, 3, 4, 5 wave 1, and A, B, C expanded flat. Another characteristic of an expanded flat is that you're going to know it because the wave B will be in 3 waves, okay? And this is in 3 waves. So we have wave 1, A, B, C, wave 2. If 360 holds as the low, from a swing trade perspective, this is a 6.5 months, 7-month move. So in the next 6.5 months, 7 months, we're going to see Costco go from 364 to 475. And that certainly aligns with what we are seeing in Amazon as well. Okay, so we're expecting the sector to have a large move, not just in the short term, but also in the larger term. Okay. So 475 is the price target because that is the length of wave 1 in time and price placed at the low of wave 2. From a pitchfork perspective, this is probably the best part of this particular setup. This is an incredible pitchfork. If you have all these reactions where the median has proven to act as a magnet and buying the lower bound has proven to act, as a good opportunity. So we're buying outside the lower bound. This is not investment advice. The idea for a pitchfork is you buy outside the lower bound, you target the lower bound, and then you target the median in the future. So I'm really expecting the lower bound and the median to get hit in the future. We take the length of wave 1 in time and price, place it at the wave 2 low, and that's how we get our 475 wave 3 target. Now we're going to look at BJ's Wholesale Club. I really like this setup right here. This is another very similar stock to Costco. We have our 1, 2, 3, 4, 5. We put in our wave 1. Then we have an A, B, C to put in our wave 2. So another really cool thing about this setup is that this is an awesome pitchfork, which you're always going to have if you actually do have a completed wave 1 and wave 2. You will have a valid pitchfork, which you can use as your wave 3 target. What we are seeing, this is our wave 1, an A, B, C correction is our wave 2, and now the connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2 has given us a very nice Andrews pitchfork with really nice reactions on the median of this pitchfork. And so now what we're going to expect is that if 36 holds as the low, that's the theoretical stop loss. The invalidation level is 32. So the theoretical stop loss is 36. The invalidation level is 32. We are expecting, if those levels hold, BJ's Wholesale Club, ticker name BJ, is going to go to the median of this pitchfork. It is going to go the length of wave 1 in time and price placed at the wave 2 low. That is going to take BJ to 64. Okay, the time target is that BJ went from the end of February to the high in the late August. So that is a 6-month move. So in the next 6 months, just like Costco, that's the 6-month target. Amazon's a 5 to 6 month target. So all these stocks, their setups are going to be moving together. In the next 6 months, we are expecting BJ will reach 64, so long as 36 holds as the low for the theoretical stop loss, and so long as 34 holds as the low for the invalidation level.